Good morning and welcome to IG's early morning call on Thursday, the 21st of September. I'm Angela Barnes. Well, coming up in today's programme, higher for longer. The US dollar jumps after US federal officials believe in lowering inflation without damaging the US economy. And the Bank of England is next today with its rate decision. The market sees a 50% chance of a pause after the inflation surprise on Wednesday. And then earnings. Retailer Next raises its profit outlook again as it reports half-year pre-tax profit is up 4.8%. Okay, well, let's start by taking a look at volatility this morning after the Federal Reserve announcement last night. And you can see just after the decision by the Fed, which was around 7 p.m. UK time, volatility increased and is around the 1655 mark. Well, risk off again prevailed in the broad markets with the fear gauge jumping 7% to nearly a 1 month high, 1514 overnight, with 30 minutes to go now as well until the European markets open. Let's have a look at how things are looking across Europe. But first of all, let's start with the FTSE. So that's set for a lower open, down 0.84%, the all-session stock on the IG platform. The CAC 40 in Paris also down nearly 1% or 1% as well. And then in Germany, the DAX also down 0.76%. So all set to open in the red as investors position themselves today ahead of the Bank of England rate decision that's coming up this afternoon. So now let's have a look at what happened in Asia overnight. Well, New Zealand's second quarter GDP, the focus of the regional markets, but overnight the Nikkei 225 futures fell 1.20%, Hong Kong's Hang Seng down 1.23%, and Australia's S&P ASX 200 was down 1.30%. So also all in the red in Asia overnight. And what about Wall Street? Well, US stock markets continued to slip after the Fed held the interest rate unchanged, but signaled one more increase. The Dow Jones Industrial Average fell 0.22%, the S&P 500 down nearly 1%, 0.94%, and the tech-heavy Nasdaq Composite was down 1.53%. Well, tech stocks led to broad losses as higher for longer rate expectations pressed on market valuations. IPO stocks were also hit by the sell-offs, with Arm's share price falling for the fourth straight trading day. And Instacart, also recently IPO'd, shares slid as well, just above the IPO price of $30. So what about this morning? How are US stocks looking this morning, or session stock? Well, the S&P 500 is down nearly 0.30%. Again, Nasdaq down nearly 40%, and the Dow Jones also set for a lower open at the moment, down nearly 20%. So all poised for a lower open after the Federal Reserve decision last night. So let's just talk about that a bit more because, well, no surprise in the US yesterday evening when the Federal Reserve kept its interest rates in the current 5.25 to 5.50% range. However, the US dollar rose when Jerome Powell delivered his firm hawkish stance, higher for longer. Well, updated quarterly projections show the central bank may still lift rates one more time this year to a peak 5.50 to 5.75% range. And the Fed foresees half a percentage cut in 2024. As of June, federal officials had expected to cut rates by a full percentage point next year, but policymakers now see the fight against inflation lasting into 2026 and believe they can succeed without damaging the economy. Well, let's just pull up the dollar basket because, well, bond yields jumped after the release of the latest Fed projections. The 2-year Treasury note neared 5.2%, a 17-year high near. As we saw earlier, equity markets fell as the dollar jumped to set a fresh 6-month high and is still on the up this morning there, as you can see. And then if we switch over as well to the dollar yen, we can see as well that was particularly watched by the market. It set a new 2023 high, taking it above the 148 level. Also gaining again this morning, but marginally lower now since I last. So it's actually just gone down to 0.01%, but still, as you can see, that steady incline there. Well, let's move on now to the Bank of England, and let's just pull out the chart, the pound dollar chart, because that will likely see some movement again today, of course, because the cable also broke the 25th of May support to set a 5-month low. And as you can see, it remains under selling pressure today. Well, at lunchtime, the Bank of England will decide on its rates. Before yesterday's inflation data, all but one of 65 economists polled by Reuters predicted Andrew Bailey would raise rates by 25 basis points to 5.5%. A hike is still on the cards this morning, but only just. As soon as CPI data was out yesterday, investors piled into bets on the Bank of England, keeping rates steady. There's now a roughly 50% chance of a Bank of England pause, up from 20% on Tuesday. Well, consumer price inflation in Britain fell unexpectedly to 6.7% in August, and core inflation also decreased to 6.2% after staying unchanged at 6.9% in July. Well, the slowdown was driven by a drop in according to ONS. It offset a jump in fuel prices and an increase in a tax on alcoholic drinks. Well, although Britain's inflation, though, has fallen from a peak above 11% last October, it does still remain among the highest in Western Europe, topped only by Austria and Iceland in August. Well, you can join me and Daily FX analyst Warren Venkatas at 11:55 a.m. for IG special coverage of that Bank of England rate decision. Well, moving on. Overnight, New Zealand released its GDP figures for the second quarter. The economy advanced by 0.9% quarter over quarter after stalling in the previous period. It was better than market expectations for a 0.5% growth, helped by a solid activity in the services sector. Well, like other currencies, the Kiwi dollar is down against the greenback, but this is not much to do with New Zealand GDP. And if we just pull up the Aussie dollar, the Kiwi dollar price chart, again, it's are expected index and existing home sales all to come. There will also be more coverage on that in our Beat the Street show this afternoon with Angeline on. And what about Europe? Well, let's move on, because in the Eurozone, the consumer confidence flash data is expected to worsen to minus 16.5 in September, down from minus 16 the previous month. So let's move on now to the corporate side of things, because Next has released its half-year results. So we'll be watching out for its stock this morning to see how the market reacts to the news that the clothing retailer has raised again its full-year profit forecast after reporting a 4.8% rise in pre-tax profit. It now sees full-year pre-tax profit at £875 million, £30 million more than its previous estimate. Well, since the start of the year, just looking at the Next price chart, you can see, well, it's actually up about 20%, and since the end of August, it's gained about 5%. So this news likely to cheer investors further again this morning. And what about JD Sports Fashion? Because it's also given us a financial update. Well, it says it's on track to post higher, and adjusted operating profit came in at £398.4 million, and underlying sales rose 12%. The group announced an interim dividend increase, returning to pre-pandemic levels. And FedEx surprised investors with a huge profit beat as well last night. Earnings for FedEx came in at $4.55 per share, jump of 32% year over year, smashing a $3.70 price that the street had expected. The result on a cost-cutting program, it was estimates from rivals UPS and Yellow, and revenue came in broadly in line at $21.70 billion. Well, if we just pull up the FedEx chart, its platform, but expect the stock to jump at the open this afternoon. And in extended trading yesterday, FedEx share price rose as much as 5.7%. Now let's move on to commodities, because oil prices fell yesterday evening after the Federal Reserve's hawkish stance. And when we look at the price charts again this morning, both WTI, or US crude, down nearly 1%, and Brent also down 0.86%, trading at $91 a barrel Brent, and US crude trading around $88 a barrel. Well, prior to the Fed announcement, the EIA announced a drop in crude oil stocks due to a rise in exports. Crude oil inventories fell 2.1 million barrels. Gasoline and distillate stocks also fell respectively by 800,000 and 2.9 million barrels. Well, yesterday, Angeline Ong caught up with Christopher Sass, CIO of Temasca Research, and asked him where he thought oil prices were heading in the second half.
My view is that we're going to see oil prices trend higher, especially if we see that the U.S. economy remains far more resilient than people were expecting, but also, too, if we see China's economy start to lift following all the stimulus that the government there has, kind of instilled in the marketplace over the last several months. Key to that will be the October 1st, September PMI data, particularly the manufacturing data that we'll be getting. And if it shows that China's economy is heating up, that rise in demand paired with supply constraints is likely to drive oil prices higher.
Okay, well, let's take a quick look at gold, and it's down 0.09% this morning to trade at around 1930, remaining under pressure as well after the Fed's hawkish rate pause. So that is your roundup for this morning on Early Morning Call. And thank you very much for watching. And don't forget to tune in to our special Bank of England coverage this afternoon around 5 to 12. We'll see you then. Thank you.